Welcome, MHP Rhino Nation, to another episode. Let's get dive deep into MHP's baby.
Yeah. Welcome to the deep dive, where we sift through the sources, cut through the noise, and really distill the actionable insights you need to stay informed. Today, we're embarking on a journey, a deep dive actually, into the world of real estate investment. And specifically, we're shining a spotlight on one particular player, Equity Consultants Real Estate. Our mission, really, is to unpack their unique approach, understand the why behind what they do, and get to grips with what makes them stand out, especially for someone like you who wants to be, well-informed about where smart money might be moving in real estate. This should be pretty illuminating.
Absolutely. And I think, especially in today's market, the real estate landscape is changing so fast. It's vital to go beyond just the surface level stuff. When we dissect a specific firm's strategy, like we're doing today with Equity Consultants, it gives us this really powerful lens. We don't just see their model, but it also helps illuminate these broader investment principles. Things like, generating solid cash flow, creating real sustainable value. That's the bedrock, isn't it? The absolute foundation for success in this sector.
Precisely.
Yeah.
So the big question then is, what does it actually take to unlock that kind of lasting value in real estate today? And how do some firms, like this one perhaps, navigate what feels like an increasingly complex landscape?
Okay, let's unpack this. By the end of this deep dive, you'll have a much clearer picture, we hope, of who Equity Consultants Real Estate is, what their core investment philosophy really means in practice, the kinds of assets they strategically go after, and maybe most importantly for you, how they actually work with investors to try and secure that long-term value. Think of it as your essential educational overview, designed to give you, the savvy investor, deeper insights.
Yeah, good framework.
So let's kick off. Who are Equity Consultants Real Estate? Our sources describe them as a private investment real estate firm and also a boutique real estate investment company. Now, those aren't just buzzwords, right? That sounds specific. No, they definitely signal something particular. Private often suggests more agility, maybe bespoke strategies, moving quicker than, say, big public REITs. And boutique, well, that points towards being specialized, focused, not trying to be everything to everyone.
Right, a focused approach. So what's their main mission then?
Well, the sources highlight their core mission is sourcing cash-flowing investments across the United States in growth-oriented markets. So it's very clear, cash flow first and in places with potential. It's not just buying buildings, it's about that income stream.
That combination seems key. Cash flow plus growth potential.
Exactly. That mission statement really zeroes in on it. Robust cash flow. It's not purely speculative appreciation thereafter. It's reliable income. But by targeting those growth-oriented markets, they're strategically layering in the potential for capital appreciation down the line, trying to capture both stability and growth.
Which is, pretty appealing for investors looking for a balanced return. And it's not just finding these properties, is it? It's what they do with them. The sources really emphasize this focus on unlocking real estate value through market knowledge, analytical evaluation, and active management. That sounds like a pretty active strategy.
It does. It suggests they're definitely not passive investors. That phrase, unlocking real estate value, is crucial. It implies they're taking an asset and actively improving its performance, its worth.
And how do they do that? What drives it?
Well, the sources mention this entrepreneurial spirit. The principals are apparently driven to push for excellence, and they focus on asset sustainability through client satisfaction, all aiming for that long-term investment value.
So client satisfaction is linked directly to asset sustainability and value.
Interesting. It is. Think about that unlocking value process. Market knowledge lets them spot opportunities, understand local trends. The analytical evaluation, that's the rigorous due diligence, making sure the numbers work, mitigating risk before they buy, and then active management. That's the hands-on part. Optimizing operations, maybe renovations, improving tenant relations, cutting costs smartly.
Like taking an average property and making it perform better.
Precisely. Imagine improving the net operating income through smart upgrades or better management. That directly increases the property's value. And that entrepreneurial spirit means they're likely always looking for those angles, those efficiencies, which ultimately benefits the clients and creates that long-term value. It's a cycle.
Okay, moving beyond the tactics, let's look at their core investment philosophy. Our sources state that today's market requires extensive insight into market dynamics in order to drive value for both investors and residents. I like that they include residents there. It's not just about the money immediately.
That's a really important point. It reflects, I think, a more sophisticated understanding of real estate investment today. It's not just a passive asset anymore. You need to understand the local economy, demographics, social trends.
And why focus on residents specifically?
Because happy residents mean lower turnover, fewer vacancies, more stable income streams. It's an ecosystem. Prioritizing the resident experience directly impacts the financial performance and the long-term resilience of the asset. It makes sense.
It does. And tied into this, something else stood out in the sources. This fiduciary-minded strategy. That sounds quite significant. They say this approach has provided hundreds of investors the peace of mind that their equity has been invested safely.
That's a big claim and a powerful one. Fiduciary-minded isn't just jargon. Legally and ethically, it implies putting the client's interests first, above their own, potentially.
So prioritizing safety and the investor's best outcome.
Exactly. In an industry that can sometimes feel a bit opaque, that commitment to act in the investor's best interest, focusing on safety and transparency, that's a major differentiator. It helps build that crucial trust, knowing your capital is being handled with care and aligned interest. It's fundamental for long-term relationships.
And they seem to really hammer this home. The sources keep mentioning client satisfaction as a cornerstone for long-term investment value. It's not just a side note, it feels woven into their whole approach.
Absolutely. It's strategic. Happy clients, satisfied investors. They tend to stick around, they reinvest, they build the firm's reputation. It signals a belief that their own success is fundamentally tied to the lasting success of their clients. That fosters loyalty, stable capital, invaluable in real estate.
Okay, so let's pivot a bit. Let's talk specifics. What kinds of assets do they actually focus on? This is where the strategy hits the ground.
Right, where the philosophy meets the portfolio.
First up, multifamily. Sources call it a primary asset type. Why? Because of strong rental demand in our key markets and its role as a key driver of long-term asset appreciation. Multifamily seems popular, but that emphasis on key growth markets sounds deliberate. What makes those markets special for them?
Good question. It's not just any multifamily. Targeting those growth-oriented markets means they're looking for specific indicators. Things like consistent job growth, population increases, favorable demographics, factors that create sustainable rental demand. When the sources mention multifamily economic fundamentals, they mean things like the stability you get from multiple tenants, right? Diversified income. Plus, historically well-managed multifamily in good locations tends to appreciate reliably.
So predictable cash flow with potential rent growth and appreciation. A solid foundation.
Pretty much. They're looking for areas where the underlying economic engine supports a growing pool of renters long-term.
Okay, next asset class mentioned is retail. Now, you hear retail and, well, alarms might go off for some people, the whole retail apocalypse narrative.
Oh, it's a common reaction.
But equity consultants apparently sees it as a continued viable investment. And they have a specific reason. Specific location-based centers will always provide non-e-commerce related services.
This is a really smart distinction, I think. They're not talking about big box stores selling stuff you can easily get online.
So what are they talking about?
Think about services you can't get delivered by drone. You know, your local dentist, the gym, a nail salon, maybe a neighborhood restaurant, dry cleaners. They're likely targeting those community or neighborhood centers that provide essential, convenience-based or experience-based services. Things people still need to physically go to.
So it's about necessity and experience, not just goods.
Exactly. These types of centers are much more resilient to e-commerce pressures. It's about understanding how physical retail's role has evolved. It requires careful, location-specific analysis.
Makes sense. Then there's industrial. Sources say the market continues to improve as the need for flex storage space increases. And they like it because of low operational and turnover expenses. That combo rising demand, low costs, sounds pretty appealing.
It really does. Industrial assets can be very efficient to run.
Why are the costs lower?
Well, think about it. Compared to, say, an apartment building or a retail center, industrial properties often have fewer complex common areas, simpler systems, lower maintenance.
Yeah.
Tenant improvements might be less extensive, and often tenants in storage or logistics stay longer, reducing turnover and releasing costs.
And the demand is fueled partly by e-commerce, ironically.
Precisely. The growth of online shopping drives the need for warehouses, distribution centers, last-mile logistics hubs, even flex space. So it offers potentially stable income, lower operating headaches, and benefits from strong demand trends. It can be a great portfolio diversifier.
Okay, and finally, the sources mention a very large presence in the affordable housing industry and also a portfolio of mobile home parks. That feels like a different kind of focus. More niche, maybe?
It definitely showcases diversification into specific, maybe less glamorous, but fundamentally essential sectors. Affordable housing and mobile home parks often have incredibly consistent demand. Why? Because there's a constant need for accessible shelter, almost regardless of the broader economy.
So, very stable occupancy, reliable cash flow.
Generally, yes, they can offer stable occupancy and cash flow. Plus, acquisition costs per unit might be lower. Now, managing these assets requires specific expertise, understanding regulations, community needs, but the potential for resilient returns is strong. It really shows they're looking broadly for value, not just in the most obvious places.
Okay, let's talk track record. Because, in real estate, experience counts for a lot. A lot.
Everything.
The sources state that Equity Consultants Real Estate's executive team has, quote, completed over $1 billion in multifamily real estate acquisitions over the last decade for various partnerships.
$1 billion
Yeah.
just in multifamily. Over 10 years. That's quite a number.
It's a very significant number. And it's not just about the size. It speaks volumes about their capabilities to do that much volume consistently over a decade, specifically in multifamily. It implies a deep understanding of that specific market through different cycles. It suggests they have a strong network for sourcing deals, robust underwriting processes, and proven execution skills from buying to managing.
So for an investor, that number signifies experience and competence.
Absolutely. It provides tangible evidence backing up their claims. It shows they can navigate complex deals, manage assets effectively, and have weathered market shifts. It gives weight to that promise of delivering long-term investment value. It suggests a well-oiled machine is at work. Yeah, it really brings it all together, doesn't it? It connects back to that core promise. That track record lends credibility to everything else, the market knowledge, the analysis, the active management they talk about. They haven't just talked the talk. Seems like they've walked the walk successfully for quite some time.
That's the impression, yes.
Yeah.
Consistency over time is key.
Okay, so as we start to wrap up this deep dive, let's try and bring it all together for you, the listener. We've seen Equity Consultants Real Estate positioned as this boutique private investment firm, their focus, sourcing cash-flowing investments in specific growth markets across the U.S. The strategy relies heavily on deep market knowledge, careful analysis, and very hands-on active management.
And crucially, underpinned by that fiduciary mindset and a real focus on client satisfaction, aiming for that peace of mind.
Right, and they apply this across a pretty diverse set of assets. Multifamily, targeted retail, industrial, even affordable housing and mobile home parks.
Right, each chosen for specific, fundamental economic reasons, not just chasing trends.
So what's the big takeaway here? What's really fascinating?
For me, it's how they seem to prioritize the why behind their choices, not just the what. It's about understanding the fundamentals driving demand and value in each asset class. That active management and client focus aren't just add-ons. They seem woven into the core strategy for unlocking value. They're not passive collectors of rent. They appear to be strategically investing capital into assets where they see clear drivers for both income and appreciation potential.
And connecting that to the bigger picture.
Well, if you connect that intentionality with the executive team's track record, that $1 billion in multifamily deals is hard evidence it paints a picture. It suggests a firm potentially capable of delivering both that sought-after peace of mind and genuine long-term value. Understanding that level of strategic thinking is vital for any investor evaluating potential partners in today's market.
Absolutely. So maybe the final thought to leave you with is this. What does this deep dive into equity consultants really tell us about the power of specialized knowledge, detailed analysis, and active management in real estate today? And maybe more directly for you, how can you apply these insights, this focus on fundamentals, on the why, on active value creation, to how you look at investment opportunities, not just in real estate maybe, but across the board?
Something definitely worth pondering.
Indeed. Well, thank you for joining us on this deep dive. We hope it's given you some valuable perspective. Keep exploring, keep asking questions, and keep staying well informed.